All right, today we're tackling a really wild investment thesis. It's a provocative one for sure, tying together the rise of AI, the potential collapse of our financial system, and one company's absolutely audacious plan to navigate what it calls the coming singularity. Okay, let's get right into it.
So the source material we're breaking down today, wow, it does not pull any punches. It kicks off with this absolute bombshell of a statement. The whole point is to shock you, right? To make you realize that, according to this argument, the systems we've built our lives on are fundamentally broken, and a massive technological tidal wave is about to wash it all away.
Okay, so let's get into the first big piece of this puzzle. The entire argument is built on a pretty bleak, pretty intense view of AI. We're not talking about a helpful assistant here that makes your job easier. No, this thesis sees AI as a fundamental threat, a threat to the very idea of what a human job is even worth.
And here's the kicker. The claim is that AI is coming for the white-collar jobs. You know, the knowledge work that's supposed to be the bedrock of the modern middle class. Think about it. Your college degree, all those years of hard-earned experience. Well, this thesis says they're about to get steamrolled by an algorithm that never sleeps, never complains, and definitely doesn't need a lunch break. And this isn't some far-off science fiction future. Nope. The thesis puts actual dates on it to make it feel real, immediate, and, well, kind of scary. First up, 2026. That's supposedly when the AI singularity kicks off, the point of no return where AI just leaves us in the dust. Then you layer on 2034. That's the year the government itself says Social Security is going to run into big trouble. You see the setup here? It's a perfect storm of technological disruption and financial collapse.
This is really the heart of the economic argument. It's like the rules of the game are being completely rewritten. In the old economy, your work was worth something. Money chased the next big idea, the next innovation. But in this new world, a world where AI can create basically anything for free and reality itself becomes synthetic, the only thing that matters, the only thing that holds value is absolute scarcity. Real, provable, mathematical scarcity. Capital isn't going to chase a good story anymore. It's going to chase something it can actually trust.
Okay, so after all that doom and gloom, you're probably asking, so what's the solution then? Well, this is where the thesis pivots, and it pivots hard. It points to one specific company, MicroStrategy, ticker MSTR, as the lifeboat in this coming storm. And it's presented as more than just a stock pick. It's framed as a deliberate, engineered machine built for this exact future. First things first, according to this view, you have to completely forget that MicroStrategy is a software company. Just throw that idea out the window. The thesis says to think of it as a capital gateway. Its real business isn't software. Its business is being a bridge from the old world of dollars and euros to the new world of Bitcoin. And man, this Death Star analogy is just perfect for describing the strategy here. Because this isn't some passive buy and hold thing. No, the whole point is that MSTR is on a mission to relentlessly suck up as much Bitcoin as it possibly can. The goal? To become the single biggest, easiest way for anyone on the planet to get exposure to it. So you're probably wondering, how on earth do they do that? How do they just keep buying and buying and buying? Well, according to the thesis, they've built this brilliant, kind of crazy financial engine. They call it the fiat-eating flywheel.
Let's break this down because it's pretty wild. Step 1, the stock market decides MSTR is worth more than the actual Bitcoin it owns on its books. That's the premium. Step 2, the company sees that premium and says, great, we'll sell some new stock at this high price. Step 3, they take all that cash they just raised and, you guessed it, they buy more Bitcoin. And here is the magic trick, step 4. Because they now own more Bitcoin, the amount of Bitcoin backing each individual share actually goes up, which makes investors even more willing to pay a premium. And the whole thing starts all over again.
Now, I know what you're thinking. Wait a minute, isn't selling new stock bad for shareholders? Isn't that dilution? And normally, yeah, you'd be absolutely right. But this is the key to the whole thesis. The argument is that since they're using the money to buy more of the one thing that matters, Bitcoin, it's not dilution. It's actually concentration. The financial strategy itself is the product.
And you can really see here just how different this playbook is. Your average CEO, they're sweating quarterly earnings calls and worrying about ESG scores. MicroStrategy, according to this thesis, is playing 4D chess. They aren't just managing a company, they're managing the monetary layer of a dying empire. They don't fear market bubbles, they see euphoria as a weapon, a tool to suck in more and more Bitcoin.
But wait, there's more. The plan doesn't just stop with hoarding all the Bitcoin. That's just phase 1.
The next step, as described in this thesis, is to start building new financial products right on top of that giant pile of digital gold. And it all starts with a way to generate income in this new, chaotic world.
So they call this thing STRC, or stretch. You can think of it like a special kind of stock that pays you a dividend, and it does it every single month. But here's what makes it different. It's backed by their Bitcoin holdings, and the company actively works to keep its price stable, right around $100. It's designed to be a reliable source of income.
And here is the number that's designed to make your jaw drop: 11%. An 11% annualized dividend. I mean, just think about that for a second. Your bank's savings account pays you basically nothing. Government bonds are getting eaten alive by inflation. So an 11% yield, supposedly backed by a hard asset, that is definitely going to turn some heads. This chart here really lays out the whole sales pitch. U.S. Treasuries, the thesis just dismisses them as political promises that are guaranteed to lose you money after inflation. Corporate bonds, too fragile, one wrong move and they're toast. But STRC, it's backed by digital thermodynamics. I love that phrase, which basically means it's backed by the pure math and energy of the Bitcoin network. In a world of bad options, it's pitched as the cleanest dirty shirt.
And that's the whole idea, right? This isn't a product for your traditional trust the system investor. This is for someone who's looked around and said, you know what? I don't trust governments, I don't trust the Fed, I don't trust corporate America anymore. It's an appeal to the person who's decided the only thing left to trust is pure, verifiable math.
All right, so this is where it all comes together. The AI apocalypse, the failing retirement system, and this wild MicroStrategy flywheel. The thesis ties all these threads together to build its case for the grand finale, a truly massive potential repricing of the company's stock.
It's all about three giant waves crashing at the exact same time. Wave number one, AI kills the traditional 9-to-5 career, and everyone desperately needs income without working. Wave number two, Social Security and pensions go bust, so everyone is screaming for a private place to get yield. And wave number three, the dollar keeps losing its value, so everyone is scrambling to find something real to hold on to. And where is MSTR in all this? According to the thesis, it's sitting right in the middle of that perfect storm, ready to catch all that capital.
I mean, you just have to appreciate the imagery here. A leveraged vampire squid made of laser eyes and SEC filings. That is just fantastic. It perfectly captures the idea that this isn't a passive strategy. It's an active, aggressive machine that is designed to feed on the chaos and siphon capital right out of the old system. And that brings us to the big number, the payoff for this whole elaborate thesis: $10,000 a share. And look, the source isn't just throwing a random number at the wall. It's presenting this as the logical conclusion if, and it is a big if, you believe that MicroStrategy can actually pull off this transformation from a software company into something entirely new.
And this is the final, and maybe the most mind-bending piece of the puzzle. The thesis says we're looking at this all wrong if we think of it as just a stock. No, the argument is that it becomes something much, much bigger. It becomes the new benchmark, the new synthetic risk-free rate for a financial world that has totally lost faith in the U.S. Treasury bond as its anchor.
So we're left with this really powerful final question. AI makes it impossible to trust what we see and hear. Fiat currency makes it impossible to trust the value of our money. So what's left? What can we actually, truly trust? The thesis argues that the last thing standing is math, and that is the bedrock upon which this entire audacious idea is built. Something to chew on, for sure.